Hello my friends, Bitcoin and Ethereum coming right up. I'm Rocky Outcrop. There are some crucial pieces of information that you might not be aware of. Let's take a look at those in the charts right now. Okay, so we're in the charts. CME 4-hour chart up behind me right now for Bitcoin USD pairing. But before we start, I just wanted to share with you why the lighting is so bad in this video. Well, it's because I can't really afford to change the angle of my phone, or the USB will fall out and I'll have to do it all again, and it's very frustrating. I tried to fix my USB connection by cleaning out the dirt from it using this pair of scissors here. Bad decision. It was a typical man decision that I made there, and I probably made it much worse. Well, there you go. That's life. Anyway, cool. Let's just crack on with things. Up behind me at the minute, I have this 4-hour CME chart, and I wanted to point out a couple of nice little nuances just here. Isn't it lovely how close up towards the top end of our fib channel the prices came in the most recent highs there in yesterday's 11 o'clock, just towards yesterday's close, actually, in the charts. Interesting stuff, right? I certainly think so. That's the first thing I wanted to point out, which is interesting. And we can see here that, of course, this shows us that we're in an upward trend and everything has been going along rosy, rosy, rosy. Everything's fan-dabby-dozy. And let's just look over here and see that in the spot prices, everything's been going along all rosy, rosy, fan-dabby-dozy as well. But let me get on to that crucial nuance then. I'm just going to be quite direct and quick in this video because I want to see if I can just, get it over with fairly quickly and let you get back to watching your election results and all that, which I'm sure is occupying most of your time. The interesting things to be aware of simply are as follows. We could be looking at an ascending triangle here on the CME charts. This, of course, is a more bullish pattern, something to be aware of, and this constitutes one of the good things that we can talk about. I'll just draw a triangle in here to show us what I'm talking about. This, of course, then is our ascending triangle area. It could be a good thing, right? We could have some. This all is a part of the positive story. We could have a measured move off the back of this. If I just take the full one, just for brevity's sake, stick it up here and look up the way, then of course this measured move takes us up towards that 14,780. That'd be putting the spot prices up towards that 14,700 area as well, I suppose, or 14,500, and things would be all rather rosy, rosy, rosy. If we were to do a 60% move off the back of that, that would be 14,500. We'd be looking at 14,400 at least, I suppose, on spot prices at that stage. That's their positive side of things here just now. Let's jump over to spot prices and make a quick little comparison and say that while this, that what we can see here is another good thing, okay? We have another good thing on the go here, and that is higher highs. We had a high here, followed up by another high here, and then another high thereafter. You're talking 28th of October, a high, 31st of October, a high, then 4th of November, another high. Very good, right? Very, very good. That's all good. We're all trending towards the top side, all lovely, jubbly, right? Good, okay. So let me just draw around this just now real quick then, in another sort of triangle type shape thing, and show you what we're looking at here. Well, this is higher highs, and of course that's positive. Now, that's us for the positive case scenario done, right? That's it done. What about the negative case scenario? Okay, what is the issue here? What's going on? Why am I talking about things as if there's some sort of something that you need to be aware of when we just went through that really quickly? Well, it's quite simple as well. Highs, highs, highs on the spot prices, whilst we have this disconnect of not highs here on the CME charts. In fact, let me just adjust this a little bit here to be more accurate. This top area of this, if anything, is descending, and what we have is lower highs and along the way here, although it's debatable because right now on this 4-hour chart we could potentially be looking at a high right now as we're talking about things. 2.5 hours to go though, so let's see how that pans out. Jump up towards a 24-hour time frame, and you can see that while there are highs coming in here, that it's a bit of a confused picture with the candle colors and shapes and whatnot that we have on the go just there. Back down to the 4-hour time frame so I can make this point. So we have this area here, which is really disconnecting from the spot prices. Slightly unusual in that spot prices have then been leading the Bitcoin prices during the weekends with these gaps that we've seen. The rises have happened up, and then volatility, which has then risen the price up without the correction back down the way to sort of take account of all of that volatility that's happened. That's somewhat negative, having that disconnect there. Here's another negative thing for us, is that all of these highs have come in with bearish divergence on the top here. So that's of course all negative. And if we put this triangle around this with its upward leaning aspect, then we can say that this is perhaps an upward wedge, in which case that's a bearish pattern and it could be considered to be a reversal pattern. In which case, if we're going to take the statistically more likely view on this one, we could do the same thing as we did on the CME charts with its ascending triangle and look to the statistical likely outcome. And of course, that brings us down towards 12,500 past all these other points of concern along the way, with the main note of concern, the main thing to appreciate here would be that we'd be going past the 236 in here at 13,000, moving down past 13,000 and past the 236. While there is this measured move that could take us as far as just the 12,464 area, should we see this 236 be taken out, we could realistically look down towards targets as low as 11,450. So that's kind of what you might need to know about right now, how this shape right now somewhat flatters to deceive. The reason why it flatters is what enables us to say that it flatters to deceive is quite boils down to how we've seen the prices kind of react in the last hours of the day, coming in here with movements up the way towards our highs in this period of time when the CME charts are closing out. Jump back over to the CME charts, go down, we're on the 1 hour here. See a similar scenario here where we actually have the higher highs on the 1 hour. But what we know is that the prices of these things, they came up high here towards 14,150, and then the day closed out. Let me just double check this in terms of the daily close yesterday. So yesterday's daily close on the CME charts ended up at 13,855. We're still in the 3rd of November day, technically, in terms of CMEs right now. And of course, we see our highs coming in there at 13,695. That's a very different story to the highs that we saw on yesterday with the 3rd November close up there at 14,000 for the spot prices, and then the subsequent red candle today. While this doesn't look like anything so special on the CME charts over here on the spot prices, you can see that this is looking more like it's withdrawn down the way from this area, and that puts in notes of concern for us, as we can see then coming in here and challenging this 13,767 CME Fibonacci retracement point. Let me just extend this to the right so you can see it a bit clearer, because the numbers all go over to the right. Pop the values to the top so that you're not being scored through. And point out this key area, therefore, for us. Trading between these two numbers is the key for us right now, of course. 13,750, let's call it, is obviously going to be our key support. If we break down below that area, then things get negativo. If we break up above 14,100, then things are certainly positivo. But what we can see here is that we have a general decline showing here on the ADX, having come up towards our red line and then move down the way, which is of course disconcerting in terms of the strength of trend. Down to the 12-hour time frame, we can see that effect in the same layout, just a bit more extended and easier to notice. On the 4-hour time frame, you can see that this positive upward movement that we've had throughout this entire time has been kind of in chop period, really, and we can see that again here in the lower time frames. That's basically just the story that we have down below with regards to this with this pricing, and therefore when we talk about this as being in chop, it makes a lot more sense that we see these kind of a distinct lack of higher highs coming in here along the course while we've done this, and instead this ascending triangle being the shape. Now, of course, this is positive. Ascending triangle, it is positive that we've been trending towards the top side. It is positive that we've done that in the face of the bearish divergence, which has continually come along here and everything else. We're in a world where there's a degree of uncertainty right now, which will become very much more certain in the next 24 hours when we have the results of the election in. So there'll become a degree of clarity with trading in the next wee while. Let's see then if the future holds for us a world without divergence along with a trend, or indeed if we see the realization of that divergence that we've been talking about with some downward price action. I would therefore recommend to be somewhat cautious in the face of what is potentially very bullish looking things like an ascending triangle consolidating in the face of resistance right here at the top of a channel that we've been at, could push past that, yada yada yada. All those things I would normally talk about. The stochastics, for instance, right now pointing towards the top side, wanting to come back into this overbought territory, etc. The 4-hour stochastics might be a bit more interesting for you in terms of just how this is turned around real here. While we have this triangle on the go, perhaps a wedge, perhaps a triangle in this area just here. The RSI had this wedge here towards the downside. We saw it. We came out. We didn't actually, get a measured move off the side of this. We haven't gone past any swing failure points. We have continually lower highs on this RSI on this 4-hour time frame in the face of those potential slightly higher highs or equal highs. Certainly bearishly divergent in terms of the RSI over here. We have and we've come back down and retested this. Now, should we move towards the top side? Good. All that stuff, we can anticipate these things happening quite clearly. But should we not do so, well then the reasons why in the face of what has been fairly bullish price action. Okay, just wanted to really get that point across. That's all I really wanted to say with regards to Bitcoin today. There are other things we could talk about, but we're going to just move on. I'll take a quick brief glance at the Bitcoin dominance chart, showing that we've come up here and we've made the majority of our measured move off the back of this wedge. Currently, if we're to just draw it in like that, roughly speaking, stick it up here, say, well, that's the full measured move, but the textbooks would have you coming down to where we are actually right now anyway. It's interesting. This is not really a chartable thing. Looking here at the GBTCs, we know that we've covered all the gaps above us and that the only gaps that remain currently are below us as well in terms of anything that's interesting. Moving over to Ethereum, therefore, and saying how does this correlate with the Bitcoin pricing as well, because this is of what we've been talking about recently in terms of the other major distinct divergence that's happening in the industry. And we're seeing that this has obviously had this downward trend, lower lows coming along the way here. Yes, we did have a tiny touch of bullish divergence here. We've come back up towards this set of moving averages, managed to do really nothing in the face of them, being resisted by the 10 and 18 as standard. We've got this downward pointing aspect towards the stochastics here, whereas we had an upward sloping one on the Bitcoin pricing. We've got this clear interim period pattern here, which of course is a descending wedge, which could see us then revive the price action back up into these areas that we spoke about before. We've come past the sort of apex, if you like, of the diamond pattern. Not that this is of particular consequence really, and we've moved outside of this rising wedge pattern, putting us in position to take a measured move, which could see us go down to 312. But we've already come down as far as the sort of 300 and well, how far did it go? 370. We've come down as far as 370 and done the sort of the fake out territory from this thing, and we're in the midst of deciding, where we're actually going to go with regards to it. We know we've covered all this in great detail recently. It's on all of the previous videos. This is just a kind of checking up with the health of how things have been going along. Jump in therefore over to this one where we have the pitchfork and all of our resistance lines and everything else. You can still see the clear area really of $400 as being super important. Movements down below 362, I think, will definitely be of negative aspect for us. Let's look out for that if there are any. Of course, so our current sort of two targets to look to are going to be 400 and 365. If we actually go towards the top side, we're talking 395 to 425. If we go down towards the lower side, we're talking 360s down to the 330s areas in terms of like a $30 10% range. In terms of this here thing, what we've seen is, of course, the failure of this interim pattern with regards to this wedge. I'm going to just remove it now. As we can see, the Bitcoin pricing pushing up in the face of all that divergence that we had and everything else, while the Ethereum pricing has done more or less, just catch the camera a bit better. The Ethereum pricing has done more or less what the charting says it should do. That's what we've kind of felt like it's all been fairly predictable. I use that word loosely with regards to the charting recently. Very, very, very predictable, and I use that word very loosely. What we have here is just essentially the continuation of that wedge that we're in just now, just going to accommodate this recent price action. The little push up that we had up towards the 56 failed, and we didn't see anything pushing past that. That's what we would need to see happening. I know this is so zoomed out, you can hardly see anything on your screens, and I could be saying all this chat with it zoomed right in here and the candles all nice and big. Really, it makes no difference. What I'm saying is the point here. Movements up above this are what we need to see happen before we get to be excited. Is it going to be any surprise to anybody that that number is going to be 28.82? I think not, right? I think not if you've been watching along. That's going to do for today's videos. Thanks so much for tuning in for the Bitcoin and Ethereum one. I'm going to go on and make a link and Tezos video now, and if you watch that, you'll get lots of educational value. It's very, very good. If you hit subscribe, that'd be good as well. I'm sure you'd like to come back for more of this content in the future. I'll catch you next time.